Hey folks, welcome. Good evening to another money space with me, Kalu Aja. On this space, of course, we're talking money, the economy, and finance, personal finance, and we're always talking about how you can be a better investor. What are the opportunities? From a Nigerian perspective, of course, sometimes we do extend it out to other regions, but usually from Nigeria. Today we're talking real estate. We're expanding our investment horizon because, of course, there's record inflation in Nigeria, about 33, 34%. That's headline. So we're always looking for ways or opportunities or asset classes where we can invest funds and get a real return. And of course, real estate is one of them in Nigeria that we can actually put money in. We get that capital appreciation plus the dividends, i.e., the rental income. So it's always an opportunity when we see folks that are doing real estate successfully in Nigeria that we bring them in so we can talk to them and we can learn. These guys are from, of course, Realty. They've been on this space, I would say, 2 or 3 times. Their base is really short-term rentals. They've done that successfully. I've known them for I'll say 2 or 3 years, call them friends as well. And I like to bring them up because they are really doing they are getting their hands, to say, dirty in that space. And they have a lot of experience that they can basically share with us. So I brought them in to talk about doing real estate investment and doing it right in Nigeria. They are both here. I've got Adebolu Mayowa. I've got Adenubi Oladayo. Hey guys, you guys want to unmute? Do that introduction yourselves, and then let's just take it from there. Go ahead, sirs.
Good evening, Kalu. It's been a while.
Yeah.
The last time we were here was, I think, last year.
Mm-hmm.
And a lot has happened. Hello, guys. My name is Adebolu Mayowa, and I'm the CEO of Asset House. So, Dayo, maybe you should do a little introduction as well.
Thank you very much, Kalu, for having us. It's a pleasure to be here again. My name is Dai Adenbi. I lead the finance function at Asset House Limited.
Great. Welcome, guys. And Asset House is still relative. I should remember you guys with the other name, right? It's still the same, just for folks that are following. Still the same name. Excellent. All right. So, like I said, I knew you guys were doing this very innovative real estate. What you guys do was to get a house and sort of convert that house and do short-term rentals. But I can invest in that property and I get a share of the short-term rentals. The value proposition is, of course, is that because you are turning around your tenants faster, you are making a higher yield on that same property. Like if I was going to buy that property and rent it out, it would be for 2 years, but you guys are turning it around faster, so you make a higher yield for me. Do I get that description right about what you guys do?
Yes.
All right, you want to talk more about it?
Okay. All right, thank you very much.
I think I lost Bolu. Were you speaking? I think I didn't hear you come through. Were you speaking?
I don't know, probably the network, but it will join later. So maybe I should just sort of take it from there.
Yeah, go for it.
You're right. When we initially started, we gave this opportunity to people to sort of invest in these units without sort of putting down this large capital outlay. So we actually were also not buying.
I think I lost him as well.
Now, the
I think I'm losing my folks.
Okay, yeah. So, Kalu, you muted me. I was trying to signal you.
Oh, go ahead. I didn't. Yeah, go ahead. Go for it.
Okay, yeah. So, I was saying that you sort of giving everyone the introduction. So I just go straight to the value proposition and the area that we play specifically. So you remember in 2022 when we came to the space, that time, and the model wasn't really, we just started the business, right? So because Nigeria, usually you can't really do any real estate investments in Nigeria without significant capital. So the time that we had the space, we had the idea, we knew that short-let rental was going to give more yields, but we couldn't get financing to get the land. So the only option that we had then was to lease the land rather than buying the land. So we leased the land, built shortlets, both 1 bed and 2 bed, then subleased to investors to co-own with us. Then we started a shortlet facility management company called Crestview Apartments. So Crestview single-handedly markets those apartments, manages it, then send returns to the owners of those units in the building every month. And for the past 15 months, we have been paying out an average of 500,000 naira monthly to all of our investors. But as we started to scale, we realized that our investors wanted more. They didn't just want to sublease those apartments for, say, 15, 25 years. They wanted to own those properties for life. They wanted to buy it outrightly. So we're able to scale and started to acquire assets. So acquiring those assets outrightly meant that rather than subleasing those units to investors, the investors would rather buy those properties from us outrightly. Then we then sign a long-term management contract with them that mandatorily allows us to market and manage those assets on their behalf under the Crestview Apartments brand, then pay them monthly. Right? So ever since the last time we had a space, I think the last time we were just at Ilupeju, but at the moment we're at Ilupeju, Surulere, Lekki, Ikeja, and Antony. So I've been able to expand significantly. But our first 2 projects have been on a lease, but as I speak with you right now, all of our other projects on the pipeline, investors are buying those apartments outrightly, and we're helping them manage and pay them monthly. Right?
Interesting.
Now, how have we been able to... Can you hear me?
Yes, I can.
All right, so we have been able to sort of like structure a system that optimizes the returns to the investors. How? We average all the returns. So we have a building that has, say, 20 units. So we sell those 20 units to 20 different investors. We manage the entire property under the Crestview Apartments location. So if I have in Surulere, I have Crestview Surulere, and I have 20 investors that bought in Crestview Surulere. We manage that building as a single entity, average all the returns, deduct all the expenses and capital expenditure, then pay them the balance monthly. And the model has quite been successful. I think we've had about 7 or 8 of your followers that have enjoyed these dividends over the past 15 months. And, they've been our returning customers. At the moment now, we have in Ikeja that we're currently selling and another one in Antony. So the idea right now is the service apartments now has become a localized product. So because the first 2 locations were not in a very suitable part of Lagos, I mean, it's not that very suitable. So we started to localize the product. So the first one has a 3-star rating. The second one has a 3.5-star rating. But the one in Ikeja and Antony would have a 5-star rating. And we are opening one in Lekki as well that will have a 4-star rating. So what does this rating do? It sort of differentiates, it allows the environment and the building determine its price point. So what that means is our shortlet apartments are very affordable to all asset classes in Nigeria. Starting from 35, you can get an apartment for 40K, 45K per night, which is still ridiculously lower than the average price for a 1 bed anywhere in Lagos. And you'd enjoy all the facilities that you'd enjoy anywhere. 24 hours electricity, internet, functional amenities, right? The one in Lekki, which is a bit more, in terms of furnishing standard, a bit more higher, would go for the rate of, say, 55, 60,000. And the one in Ikeja and Antony, which would be our own 5-star project, will go within the range of 70,000. So what that means is the investors, and these locations have different price points. So we don't sell those apartments at the same prices. So if the location is better, it means the cost of land will be higher and the cost of development will be higher. Of course, okay.
So I just want to capture what you just said. So in the past, you were doing the lease to rent. So if I want to invest, I don't own the apartment. I'm more or less leasing it from you, and I get a share of the dividends, the rental income.
Yeah.
Today I am buying the apartment, that I'm giving it to you to manage, and this 70K, 40K you're quoting is the rentals that you make on the apartment that I own.
Yes.
Perfect. All right.
They will then accumulate all the revenue generated, not in your apartment, but an average of all the apartments in that building, take out all the expenses and pay you a dividend every month. And this dividend would vary, and the variance are dependent on the location and the unit pricing. So I'll give an example. The one in Surulere, for an apartment that we rent out for say 40K, 45K, the investors usually would get an average of 500K. The one in Lekki, to be opened, if the unit pricing is about 70,000, from the top of my head, we're looking at a return around say 650 to 700, 500 to 600 thousand naira every month. So the returns usually is always a factor of the location, the cost of development, and the cost of amenities that we're providing.
So, if I was buying something in, say, the Surulere one, how much is the apartment in Surulere? How much is one in Lekki? Just if I wanted to invest in this and I lived in diaspora or I had funds, how much?
Okay, the one in Surulere, they are all sold out. So the one was current. Even the one in Lekki, as I speak, is sold out. We'll be running it by December. We're at the roofing stage at the moment. But we're currently selling the one at Ikeja and the one at Anthony. We have not officially launched the one in Anthony anyways. But the one in Ikeja, if you're to buy, you're buying a one-bedroom apartment for 50 million. You're buying it outrightly. And what we're looking at is, after all the expenses have been deducted, you should be earning an average of 700,000 monthly, an average of 10 million in a year, because there are peak periods around say November, December, January. Then usually the occupancy sort of like stabilizes around 70 to 80% during other parts of the month. So you're buying an apartment of 50 million, you're getting a return around say 700K. The 2-bedroom sells for 75 million. Of course, you'd expect that would charge slightly higher than what we charge for a 1-bed. So a 1-bed is going for say 70, the 2-bed will be going for say 100. And if you check anywhere, as I'm talking right now, online, to get a 2-bed serviced apartment in Ikeja, to be going for nothing less than 130, 140, 150. And that's because individuals are the ones owning those apartments and converting their own personal apartment, or they buy an apartment in a building, where they still have to pay the developer service charges and what sort. But because we have significant control over all the amenities, so we're aggregating all the expenses, we can sort of, go like 10, 15, 20% below the market rates and, get our occupancy and pay our investors. So the 1-bed is for 50 million with an average of, say, 700K monthly, while the 2-bed is 75 million with an average of 1,800K to 1 million monthly, depending on the occupancy. So it's not fixed. The occupancy, the expenses, now that they've moved most of our projects to Band A, we're trying to adjust the prices to reflect, the new expenses. But I would also say that we have had a bit more light that we have had over the past 2 years. So we're still trying to adjust the model to ensure that the returns still stabilizes around what we promised our investors before purchase.
Gotcha. In terms of, say, percentage return, just to compare this with, say, stocks and bonds, I'm looking at, if I do 10 million over 50 million for the 1-bed, that's about 20% more or less.
Yes, so another thing about, I think Dayo would expatiate more on that, because there are different factors. We also pay monthly, right? That's one. Two, we ensure that the occupancy, when we started selling other projects, we promised a fixed return rate. But when we started, the market itself would adjust. So if we are projecting 70% occupancy, and when we start, so we're able to achieve 90% occupancy, the returns jump significantly. So we can't really sort of give a fixed amount, but we already have a range model that Dayo would be talking more about.
Okay, and is there like any guarantee, not up for the rentals that are going to come to me every month? If I put in the right now, I'm buying. If I buy the one bed for 50 million, and is there going to be like any minimum I'm going to make every month to say, yes, this is my minimum, and then when there's a peak, I make more, something like that?
Also, so we have some clients that usually don't want to take risk. So they just tell you, oh, Maiwa, I don't want my returns jumping up and down. Can you give me a fixed return? So even if you have high occupancy or you have low occupancy, you get this fixed return. So we usually have that discussion with clients and we pay them a conservative return, say maybe 500,000. But at times when the occupancy jumps, they get like 850. Sometimes they get like say 600. But if a client or an investor asks me that question, what I just do is I just forward all the returns that has been paid over the period, say like 24 months. So they can do the calculation and average how much we would possibly pay them. So we have a report. So we send investors reports and the amount that they get paid at the end of every month. So we use that average to forecast how much. So if they don't want to take risk, we can then agree, at the back, so like, okay, you know what, let's just do 500k. So whenever upside doesn't come to you, so we just know that for this particular client, there's a fixed amount that will pay them if they don't want to participate in the upside.
So essentially, and I still own it. So I have a C of O and all that. Who has the legal paperwork and all that?
Yeah. So because the entire building is managed under a facility management company in Crestfield, and we have a lot of clients that just buy because of returns. As I'm talking to you now, we have a lot of retirees, they depend solely on that return. So if we don't have a strict policy that says if we have 30 units, all 30 must buy for shortlets. You can't buy for you want to live there, or you want to, at some point, you're coming down to Nigeria, you want to be there for 3 months. If we do that, what that means is, if by venture, 15 or 20% of our investors want to come down to Nigeria within, say, December, what that means is our revenue drops by 30% because it's being occupied by the clients. But we've promised our investors that December is when we have peak periods, and that will affect our own promises and projections. So we usually have a strict policy that says if you own this apartment, you can stay there for 7 days without paying anything. And if you then extend your stay, you don't pay anything. We'll just deduct, if you're staying there for another 20 days, we'll accumulate the daily rates. We might not give you the market rate. We can give you a rate because you're an investor, then deduct it from your returns over time, not necessarily deducting everything from the next month's remittance. We can say, okay, we'll amortize it within 3, 4, 5 months, and you pay it gradually.
Got you. Just overall, right? As an investor in Nigeria, what's your take overall? Say investing, and particular real estate investing in Nigeria. I mean, there's Abuja, there's Rivers, but I'm also concerned about those off cities, the Nasarawa near Abuja, the Ibadan near Lagos. What's happening? Will the rail line help real estate in Ibadan? What about Kefi? Could you just give us maybe an intro? Someone is listening here, he wants to do an investment. He's not going to come back and live here, but he wants to make that return or perhaps generate income for himself. What cities are we looking at?
So because we operate on those projects, if we were selling lands, for example, or we were selling houses for people to live, we could sort of take, as I'm talking to you right now, we're looking at having Crestville in Abuja next year. Currently, we have 6 outlets in Lagos. We planted those 6 outlets in strategic parts of Lagos. Ilupeju, Surulere, Lekki, Anthony, and Ikeja. They're all very close to the airport, aside Chevron, which is on the island. So if we're looking at expanding, I would say Abuja. Abuja is a good market. I would have said Rivers 2 years ago, but the instability around the skewness of the source of income around people living there now. Oil is no longer something you can bank on and create an investment opportunity for our investors, right? But for us, we're looking at Abuja and I think Imo, some parts of the southeastern part of Nigeria as well. And one other thing I would say is, flipping is also an investment opportunity in Nigeria. We have had some clients that have just bought off plan. They just wait and buy it when you're just starting to build, and they sell when you're done. But the risk is a lot of developers sort of mess the timeline up. They can, and inflation has really affected the business as well. You can project to spend X amount of money, and when you're done, you're realizing that you're spending almost 100% more than you budgeted, right? So for every opportunity, there's sort of like a risk attached. That's why our focus primarily has been assets that can, that can send in cash flow to our investors every month. But I think Abuja, Ibadan is coming up. But to be very honest, it's not a market that I see eating its peak in another like 3 to 4 years. So maybe when the railway is more stabilized and the youth maybe starts to run to those areas because of high rent in Lagos, then we can now start looking at that market. But right now, everyone, as I speak to you right now, wants to either move to Lagos or Abuja, and the Lagos market is still far ahead of any other place from our own current research at the moment.
Gotcha. So I mean,
I probably let me also just chip in there. So I think it's always very good to sort of like take a look at just like general picture, of the investment environment in Nigeria. You have to also look at one, where exactly is like the capital going to. You understand? What exactly generates economic activity? Where are all of these things, concentrated? Where are people moving to? Where are the jobs, sort of like happening? So if you look at all of that, right, you look at Nigeria's capital importation report, you look at, the recent like GDP report, you look at things like, where exactly the airports are, you look at things like, the number of restaurant chains, all of those things, shopping malls, all of those things. And you look at all of these things all together, you aggregate all of these things together, you then think about it like, okay, what exactly, all of these things are, what really forms the backbone of an economy, okay? And then you aggregate all of that knowledge together, then you can only see that the opportunity really in Nigeria is just in a few places to really get yield. And, I would also want to put it in this way. So if you, as we said earlier, previously we were just, focused on maximizing like the cash flows, in the sense that we were leasing, those properties. So if people were investing in those, did not have access to any sort of like capital gains, right? They're only benefiting from the dividends. So now if you buy something outright, right, you know that yes, if the economic activity is happening in this place, there's some sort of like value accruing to your initial capital. So let's say you buy something for 50 million. In 10 years, you expect to say, okay, even if I don't want to, own this place again, I want to move out of Nigeria, right? Or you have a need to sort of like, you need your cash for something else. You want to sell something quickly. You want to exit quickly. In real estate, there's that liquidity risk, right? So all of those things are what you saw. When you look at all of those things together, you just say, well, there are only very few places in Nigeria where you can get such value for your investment, right? So, whether it's Lagos, whether it's Abuja, whether it's Port Harcourt, whether it's in the, the very, very, popular cities in the east, or even in the north central, right? So when you look at all of those things together, you have a sense of, where exactly should. So if you, as whether you're an investor or you're a buyer or you're even a developer, you're looking for new development, you look at all of these things and you have to go for, because you want to make sure that you get a return in your capital as soon as possible. So really, as it is now, I would say that Lagos, Abuja is where it's happening in Nigeria. Most of the capital is flowing there. Most of the jobs are coming up there. So that's one investment case for it. So you asked the question earlier about how exactly does this compare to, other things. Or I think you want to say something first, maybe before, or should I?
No, I was just saying that I was just looking at the calculator. 50 million naira is about, let's just call it $30,000. Is that correct? 50 million. Yeah. Wow. So with $30,000, I can buy is that a one bed or a two bed in Nigeria? One bed or two bed?
So for our own specific projects now, I'm just looking at the old general, Lagos, Abuja, general real estate environment. I think that should get you sort of like a 1-bedroom apartment in sort of like the medium broke places, if I will call it that. The high broke places, that's like Ikoyi, Lekki,
Wow.
Phase 1. You cannot.
So
You probably get like how.
No, I'm just saying. So if I go to America now and I borrow $30,000, I can borrow that at about below 10%. I can, if I do a HELOC, which is a home equity line of credit, I can borrow that amount at about 5, 6, 7, 8. Let's just say 8%, and that's for 30 years. 30 years. So if I take that money to Nigeria and I buy 2 1-bedrooms, that's about 60,000 or 30,000, and you're giving me Naira revenues. I'm not going to use my Naira revenues to pay back the loan. That is going to be that exchange risk. But I do get this Naira cash flow, which I could then invest also in Nigeria, maybe in equities or something else. But it's really $30,000. I'm going to pay back 30 years. If I travel back to Nigeria, like you said, 7 days, I can stay in this place for when I'm in Nigeria, right, for the week. It does make sense if you look at it that way.
Yeah, of course. So let me put it this way. I think for most people, I would advise really that I don't think it would, just looking at the whole environment in Nigeria.
Go ahead.
The risk, the inflationary environment and all of that. I think it would be better to, when you are making like an investment in the country, you should have sort of like a longer term view and also ensure that your investments are generating cash flows. That's one. Then two, you're also getting that capital, capital appreciation on it. So, and that's the advantage of what we offer. So, for example, if you say you have $500,000, you're just hypothetically, right? So, or let's say you have $30,000, as you said, right? $30,000 today is say 50 million, right? At the rate of, there's you buy, an apartment, or you say $10,000, you can use it to do anything, right? You keep that $30,000 in a money market account, right? Getting maybe 5% on it yearly in USD, right?
Yeah.
Or you bring that and buy an asset here in Nigeria. It could be you buy land and you just, allow that to, you syndicate, you buy that land and then you wait for some time, maybe like 10 years or 15 years before you sell that back. Maybe over that period, the price triples. That's so 50 million over that period, it triples to 150. Now, let's say over that same period, the value of the Naira house. So essentially, you are getting just net, let's say the value of the Naira house. So that means that $30,000 then is now $15,000 now in Naira. Or yes, in Naira, right? So it means that net, the value of your investment really probably rather than 2x, you are looking at something maybe like 0.6, 0.7x, right? But then if you invest in something that produces those cash flows, one, over that period, you get your 150 million, right? But also the dividends that you are getting over that period, say within 10 years, depending on the yield, if it's 10%, like what we do for those who are currently like invested with us for our outright projects, are getting roughly between 10 to 12% in terms of the yield, the rental yield on that. So over those 10 years, you already get your capital, right? Plus then that capital appreciation. So you're getting like 4x. So even if the value of the Naira house, you're still getting double your investment at the end of the day. So that's the way I think people should approach investing in Naira assets.
So
right?
If I understand what you're saying basically the Naira dividends will pay back the fixed Naira cost used to buy the house. That's what I'm hearing.
Exactly. Over that period, the Naira dividends will pay back that amount you bought it for. So then your capital appreciation is now, your net earnings over that period. So I think that's the way people should also. And also, I would also say that you in Nigeria, or whether you are living abroad, even if you live abroad, you would have, you want to send money back home. You have people back home that you want to do things back home. Maybe you want to come for December and spend money. I don't think it would make sense for you to be selling off your dollar savings over there, right? So your naira investment should be paying for your naira expenses. You understand? So even because if you say the naira is devaluing and then you are selling your dollar, it means you're already losing value. So rather than that, why not just invest in something that produces cash flows in Nigeria, that produces capital gains for you, whilst keeping your dollars over there, right? And then if you have an asset here in Nigeria, you can lend against it, right? You could talk to our banking partners, and you from there you grow your wealth right in Nigeria without even exposing yourself to whether it's the interest rate risk or inflationary risk or FX risk that's associated with all of those things. So that's just the way I see it.
Interesting. I wanted to ask a question. I want to bring Olumide just to talk about in terms of the comparing this with stock market and all that. But the question was, is there a mortgage? Do I have to pay 50 million naira cash, or can I get a mortgage to buy this? Just a question.
Okay, so currently we don't have any mortgage partner. Well, what we try to do is we try to allow our investors to spread their payment within the construction period. So if we're building within, say, 15 months, our investors can spread their payments within 15 months with just about 15% down payments, then spread within with an interest rate of less than 10% within that 15 months. So you're paying 55 million within 15 months, flexible. But currently, at the moment, we don't have any mortgage partner.
Interesting. Do you mind me bringing in Olumide? Olumide, you've been listening, right? Olumide, I'm looking at Nigerian returns. Nominal yield, Treasury bills, 21%. 2 years bonds, 17%. 3-year bonds, 18%. Corporate bonds, 26%. Stock market, 30%. These guys are doing about 25%. What's your take, Olumide?
Interesting conversation, Carlo, and thanks for bringing me in. I listened to the gentleman. He made very interesting disposition, but I have a few concerns and I wanted to ask questions. So, for me, for example, I have exposure in the Nigerian capital market, but I'm also looking at diversifying into the real estate market, and intentionally, I have little exposure in it because of the regulatory concerns. So, my first question for the speaker is like, for example, money market, I'm getting 21% per annum. So my 15 million investment, for example, will fetch me 10 million tax free. That's even if I'm using the FGN security. Let's even say I put that investment. So the thing is that liquidity risk is negligible. The rate of defaulting, though we had a few cases, hiccups, the FGN season was recently, but it's almost lead to the safest security. So my first question is that, how do I know the strength of your company, for example? Do you have access to your financials? Do you guys do investor session? Do you open your books to investors? And, the Lagos State government released a data report that sent bills across the financial space that 15% of properties in Lagos are just registered. So, are your businesses, your properties, are they all registered? Is there a way we can verify? Then, lastly, it's interesting to know that many Nigerians don't have exposure to credit and liquidity. Just like you rightly said that the amount of money used to buy that property is not cheap, looking at the disposable income of the average Nigerian. So, do you spread cost, or are your target market the ones in diaspora, upper middle class? These are a few questions I wanted to ask.
All right. So I think your questions are sort of like bordered on different things. One, I think you talked about governance, right? Two, you talked about comparable returns with other asset classes. Then three, you talked about corporate, structure. That's like, are we registered with the government? Are we following regulations and all of that? I think probably let's divide it this way. Maiwa, you probably talk about the company's registration, all of those things, and how exactly we comply with regulations as regards real estate and all of that. Then I would just take the governance and comparable this thing. So I think you just start from there, and then I'll take it up after that.
All right, thank you very much. So, when our first two projects, I don't know if you joined when we started, was a lease, right? So what that means is we didn't buy the land, so we leased the land. So the cost of acquiring those assets were very, very low. So the yields were much higher. At some points, we're having yields of like say 35%, 40% in a year. That was because the cost of buying those assets were like less than 1/3 of what the actual value was because we didn't buy those lands. But the projects that we're currently selling outrightly, because our investors would buy those properties and own it for forever, right? Under the Land Use Act law, which says if you have a C of O, you own it for 99 years. We usually ensure that those lands have registered title. Like the one in Ikeja has a governor's consent, which can be verified, anywhere, allows her, and we ensure that we get our building approval before we commence the site. The one in Lekki, every other project that we acquired outrightly, that we acquired the land, rather than leasing from the original owners of the land, we ensure that they had either C of O's or governor's consent, and all approvals were sought before construction commenced. Then, what else again, Dio?
Yeah, I think he's now talking about governance and all of that. Maybe I should just take that. So as our companies are all registered, that's one. Two, we have a board. Even though we are still quite small. We have an existing board, and one of our directors basically owns nothing in the company, right? I would not want to sort of like expose that person because they are quite private and all of that. But that person is has sort of like I think 15 to 20 years experience in the financial sector and also oil and gas sector. So we are compliant to the level of what you'd expect from a small business or a medium-sized business, right? That's one. Two, I think your question around comparable returns, right? So I would say this, right? One, you're investing in money market today. The yields in the money market, if you buy once, you cannot. There's no compounding for money market investments. That's one. Yeah, we have compounding with as regards the even the earnings themselves compound. Why? Because we adjust our prices in line with inflation. So of course there's an increase that earnings and all of that. And once you invest at once, you earn those dividends for life. So it's more like you are an equity partner in this business. That's one. Two, you earn capital appreciation. So whatever you're buying has a value attached to it that increases. So, but then if you look at the money market, you only get once you get that payout, the only thing you are concerned to is the yields that are already available in the market. So let's say inflation comes down, the central bank will reduce interest rates. You won't have access to that 20% again. Okay, there was a point, I think in 2020, 2021, yields were like very low, I think about 9, 10, 11%. So, those are the kind of things that you would see in, financial markets. Yields fluctuate and all of that. So, compared to this is something that once you buy at once, you get to enjoy your dividends. And this is not an equity investment in the market where things are subject to overall market conditions, whether how the company performs itself. So some companies might decide not to pay dividends this year and all of that. But you are the owner of this thing, right? So basically, we only deduct operating expenses, and whatever is left, we take a percentage of it, a fixed percentage of what is left. So you always have something at the end of the month, right? And if you say you want to sell today, in fact, I will tell you that you, as an owner, you want to sell. We ourselves will buy it from you. So we have a structure in place such that the liquidity risk that's associated with real estate, regular real estate investments. I'll tell you today that if you buy land from some of these developers in some of these other locations that I talk about, if you buy something from them, like for people there are people who have bought from them, say 2-3 years ago, that want to sell now that can't sell. In fact, they're not even picking their calls. But that doesn't happen with us because we've had people, like 2 or 3 of our clients who bought from us and then 3 or 4 months later, they just came and said, yes, they want to sell, that they need cash immediately and all of that. We bought it from them, right? Yes, and then we found people to sell it immediately. Why? Because there's a lot of value attached to what we sell. So I would tell you that as regards competitively, we are far more competitive over the long term, better than whatever exposure you get. And again, if you the way financial markets are, I'm also a player in the capital markets, so I'm kind of conflicted here, but the markets are generally, I think the equity market itself has not moved since probably like February, so it's more like an arbitrage game at the moment. So if you want to make money in that market, you have to give your money to a professional manager, or you put your money in an ETF or something like that, or a mutual fund. So if you look at all of these things and then you compare that to an asset that is real, that you can see, that generates cash flows, that you can measure, you can even come there and see it every day, people move in and move out, so you know that your money is working. All right. So these are the things that for in my opinion, I think it's a very, 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 very good value proposition for anyone.
Can I add something quickly?
Go ahead.
Yeah, very quickly. So I did mention that we send investors a report at the end of the month, right? So they would have access to the breakdown. So I'm on my phone now reading a sample report. An apartment was booked for 25 days. The total revenue generated was 900,000. Total expenses was 400,000. And return was about 555,000. So that's what they get at the end of the month. So they see the breakdown of the occupancy, they see the breakdown of the expenses, and they get their returns stated in the report. So if you want to sell, you can easily just send an email, would accumulate all the returns that you've earned so far. If you want to use it as a social proof, if you have a buyer, so you can easily say, if you buy this property the following month, you're already earning this amount. I've sent an email, and the returns will then be accrued to you monthly. That you also mentioned, we had a client that bought a unit of 1 bed last year for about 29 million and sold it for 40 million, and he has collected one month return before he sold. So aside the returns that you'll be getting monthly, when you tell anyone you want to buy, that wants to buy from you, and tell them this is what the reports that I've been getting and these are the returns I've been earning, it's easy to sell. And also we organize an investors forum, sort of like a meet and greet session every year. That's where we analyze the challenges, the future projections, and the strategy for the following year. So we do that every year. We also all the investors at Radisson, and we do a breakdown of everything. Then plan for the next year ahead. Just to add to what.
So what I was just going to summarize what Olumide was saying and what you guys are saying. So if I had two options, right? Let's say I have a 2-year bond issued by the federal government of Nigeria. That's the safest investment in Nigeria. That 2-year bond is paying me about 17%. So the real yield is minus 15, right? So if I buy that bond, I get 17%, but I'm actually losing 15% because of inflation. If I buy your property, so in your property, I'm going to get 20%, which means I'm losing about 13% real. But the capital appreciation on your property is really what differentiates you from the bond. Because the bond itself, like you said, there's a reinvestment risk that the interest rate is going to change when that period runs away. But in your own case, the property value, even if it does not appreciate, it's 50 million. And again, I'm hearing you say you pay monthly revenues. So if I have that property, even if I'm not going to come to Nigeria, someone says, uncle, school fees, this month's rent goes for school fees, tomorrow's rent goes to my Mecca. I'm getting that rental, and if I come to Nigeria, probably I could also then stay there. But I like the part that you said about statements, because with the statements, it becomes cash flow. I can take that statement to a bank and monetize it and tell the bank, hey, this is my income in Nigeria. I'm making this income in Nigeria. I want to borrow money, or I want to do this, or I want to go for visa. This is income from my property, detailed month by month. So I like what I'm hearing so far. Let me get Osman. Osman, thanks for hanging on so long. Osman, please jump in, Osman. Just going to wait for Usman a bit. If he doesn't, I'll come back to you, Adebola. Yeah, let's come back to you guys. Olumide, did you want to add anything to that summary I just did as regards comparing this to treasury bills?
Yeah. So I totally agree with the speakers. But you know, the only part that uh, might be a concern for me is how you sell this project to the average Nigerian, or it seems that your target are the upper class Nigerians or the elites. Because if you look at the payment plan, for example, you mentioned about one-time payment for the Kenya property. So I'm looking at how do you guys really tap it, because this is a very interesting concept. In fact, I'm not looking at how to. I'm considering it. Looking at how to position, because naturally anything real estate except on Carlo space, I try to run away from it, because I have a lot of friends that have um, swam with sharks and got beaten badly, and I don't want to hear that unfortunate story. Because in Europe, for example, buying property is as simple as buying a stock. I don't know why it's very difficult in Nigeria. So please, do you have a website? Then also you look at the also concerned about the naira devaluation. Yes, you might say that you get capital appreciation, but at the end of the day, for somebody bringing FX in, though you've advised that it's nice for people that are within the local context to really move to, it doesn't bring in that foreign exchange loss. But for Nigerians in diaspora that are looking at this opportunity, are you looking at windows where people can use that opportunity to hedge? Because many of us don't really have something really solid back home that can really depend. So do you have those kind of concepts in future? Thank you very much.
All right, thank you very much, Olumide. So I'll give an example. I think right now, if the banking system was right, I can tell you for a fact, no one walks into the bank with a copy of our annual report. So the annual report sort of states how much every investor was paid every month. No one walks into the bank with that report. And I see no reason why the bank shouldn't be able to loan, if you have, say, like 20% down payment. I see no reason why the bank shouldn't be, lending any of our customer that walks into the bank, because you can as well just have an agreement and say, you know what, for every return earned this month, just pay me 40% or 30%, and you pay the remaining 70% to the bank. Secondly, we have clients that couldn't afford to buy this outright when we were selling lease. So the lease was usually within the range of 10 million to say 18 million. So we had a lot of lower middle class that could afford that property, right? But right now, what we advise is people can as well peer. So we had a client that had 3 of his friends. They were both in Nigeria. They contributed money together and they paid the initial deposit. And at the end of the payment period, they went to the bank, created a joint account, and we send that money to the joint account. I don't know how they share it, but that's what we also advise our investors to do. And we are also hoping that when the government can sort of open up that mortgage, I think our project would be one of the hottest in the market, because it's very direct. You're investing this amount of money and you're getting this average returns every month. And you also talked about inflation. I can tell you that some of our diaspora clients might even be converting the returns every month as a way to hedge against or reduce the risk of devaluation. So that's also an option. Or like Dayo said, you have the money in Nigeria to cater for, all your, Naira needs, right? So an option is, I believe, right? I could recommend 1 or 2 banking banks that we have good relationships with, if they can sort of like help, or you can just crowdfund with 2-3 partners, create a joint account, and we pay to that joint account every month.
Yeah, so let me also sort of like chip in there. What Maya said is basically apt. Okay. It's a very sad thing in Nigeria today. Of course, I think the biggest problem we have in Nigeria is still inflation. Without that, you can't have you can't have a thriving mortgage industry, right? People, because the interest rates on the loans will be just too high, and it would it won't be inclusive for the majority of the population. So that's quite sad. Maya was already giving some of the options that we give to people. I would also tell you this for a fact. We've been doing business with some banks, like regular commercial banks, for about 2 years. Okay? They've not deemed it fit. Like, they see our cash flows every day. They've not deemed it fit to even call us to say, oh, yeah, we have this line of credit available for you. Okay? But I will tell you for a fact that an Islamic bank, they are very, very strict. Very, very strict. If anybody here knows what an Islamic bank is, non-interest banking, they saw our numbers, right, and they immediately poached us from our commercial banks, and they're offering us this line of credit. I will tell you that's how strange it is, to show you how the Nigerian banking system is it's just lopsided. Okay, so there is not much we can do in that place. Of course, some guys are already doing things very interesting in the technology space, trying to fractionalize these assets. It's something that we are also looking at, sort of like in the medium to long term. Okay, but at the moment, of course, we have to do what's available, what's possible or feasible within the available capital that we have on our hands. Okay, so of course, it's something we are working on. Initially, when we started, our products were a little bit more inclusive than it is. But of course, as an organization, as a company that prioritizes very high quality development, those leases were just not as profitable for us. So we had to find a balance. I would say that in the future, we're also looking to partner with some of these banks to have a record of some of our clients who already have these assets, and then they can use those assets to acquire more assets in the future. So really, it's an exciting one, but also just the macroeconomic situation of Nigeria, the fact that there's no financialization in our real estate sector at the moment, it's a really sad thing. But then what can we do, really? So influencing policy is not, it's still the job of the larger players, and most of them are not looking at that. If you go to these guys who are building in the Ikoyis, who own the shopping malls, the larger shopping malls, all of these guys who are like at the top of the food chain, they don't really care about even the upper middle class in Nigeria. Okay, so we still have products that are inclusive to the upper middle class and also the middle class, if you look at it that way. So we have clients today who, even with earnings of 1-2 million naira in a month, can afford to do. And I think Carl also said something then, that for those who are already earning on a monthly basis, you can use those monthly earnings to dollar cost average. So you can take those monthly earnings and even invest in dollar assets and average using dollar cost average. I think you're very familiar with dollar cost average. So this predictable cash flows also helps, and that's what some of the advantages that we're bringing into the place. So we are differentiating ourselves even within the sector. So as Maya said, if the fundamentals change around the macroeconomic picture today, we are open. We are positioned to actually benefit massively from that. So that's just what I would say to you. Thank you very much for that question.
All right, great. I won't get Benga in to ask the question, but let me also say that there's this new pension law that allows contributors to use 25% of their RSA balance as a capital injection to get a mortgage. I'm not sure if you guys are plugged in there or if you're exploring that with the PFAs. But let me get Benga to ask the question. If you guys have that, you can also just let us know. Benga, hi. What's your mind with this?
Yeah, thanks, Carlo. I like what I'm hearing. I also like the figure the guy is giving out. As ROI. This sounds so good. But I want to ask him, who is going to be responsible for insurance of this house? Is it going to be the investor, or they will be responsible for insurance of this house? Because it's going to be an apartment, right? So insurance in case of inferno or whatever outbreak or anything happens, who is going to be responsible? Are they going to capture that into their own account, or is it going to be done by investor? That's number one. Number two, I want him to clarify to me, who is going to be responsible for furnishing of the apartment, the whole accessory in the apartment? Is it going to be the investor? Is it going to be them? Number three, who is going to be responsible for overall maintenance of the building, exterior especially, maybe painting, maintenance, general maintenance, everything. These are the 3 questions I would like him to help me with. Thank you.
All right, thank you. I'll answer the first question, and Maya will answer the remaining 2. So, as regards the insurance, already as you said, as we told you earlier, we aggregate the earnings. So even before your net earnings get to you monthly as an investor, all of that has been sorted. Whether it's your insurance, whether it's the capex to fix, to maintain the building, whether it's your withholding tax, even all of those things have been deducted before you get. So we already have provisions in place, and those are the advantages of the structure we've put in place, such that if you were owning those apartments individually, it will be sort of how would I put it? The aggregation basically helps, right? If it's in clusters like that, it won't make sense, because if, for example, you are in a building and someone is not paying their service charges, and then the landlord cannot afford to give everybody, but this time around you have one landlord or one manager who is aggregating all of this, whether it's so all of those things are taken care of before it goes to you. So of course, we have that insurance in place, and then the earnings of that building itself and the apartment all together pay for all those things individually before, so you don't have to worry about that as an investor. So as regards the furnishing and then the maintenance of the external building and the areas and all of that, I think Maiwa would answer that.
Okay, thank you, Tayo. So let me start from the furnishing, right? So our first 2 projects, Kalu I think Kalu, you would remember that we added the cost of furnishing to it, and one incident happened this year. First, we had one of the craziest inflation, where the money we charged for furnishing sort of like ate into the cost of construction. Very, very recently was what the project we just delivered at Surulere. We in fact, we had about 40 million deficient. Like, we had a loss technically. Inflation sort of like, it was a lease, so it wasn't profitable. And at the end of the day, we still had to finish that project. So what we did, and we had already put in the cost of furnishing. So what we did was we had to send an email to the investors, and we told them, see, there's this extra cost. So if we are to pay you, say, 500,000 every month, we'll pay you 300, and we'll amortize that over, say, like 24 months. Or if you're willing to pay in bulk the cost of that extra cost of furnishing your apartment, you can pay. So because of that issue, we couldn't afford to have those. We had about 15 to 20 ACs, we had sofa chairs, and there was a time that rain fell, entered into the warehouse. It was massive for us. And secondly, usually the furnishing that is in vogue before development isn't what would be competitive after development, because we always want to stay ahead of the game. So if I plan that you should spend, say, 3 million naira to furnish a 1-bedroom apartment 18 months ago, because typically the project is being developed within, say, 15 to 18 months. At the point of delivery, something else is in vogue, and I've charged you for it. So it's better for us to sort of like hold down on that furnishing and just charge the basic finishing. Then 2-3 months before delivery, we send the furnishing bill, and we do it for all the investors. For some of the investors that would not be able to afford to even pay all, we come in and do it for them and deduct that returns over a specific period of time. So that's what we do as regards that. Then the third question you asked, the furnishing, the maintenance. Sorry. So now the thing is, anyone that wants to book an apartment doesn't know that you as an investor own a unit of 1 or 2 bed in Surulere or in Lekki or in Ikeja. All they know is Crestview Ikeja. If they'll give a bad review, they'll put a bad review on Crestview Ikeja's Google review, which will be a dent to our own business, right? So we ourselves, the maintenance, both the exterior and the interior, is of more importance to us, because our customers, we have about 5,000 customers that come in every single year in different of our outlets, and we pay attention to their reviews, right? So we don't wait for even you as an investor to come and say that it needs maintenance before we do it, because people see it as our business. They don't even know that these units are owned by different investors, right? So that's why the maintenance, both in and out, is our priority. And even when you furnish your apartment at first, no one calls you again to change anything. Usually within like 3 to 4 months, we revamp all the shortlet apartments without even calling the owners of the apartment to say, oh, we are changing this. So we do it with our money, then take out the loan. We can sort of like loan the apartment, then take it out in like 6 to 7 months. So that's what we do. So when you pay for your furnishing once, till the business ceases to exist, no one calls you to ask you for a single penny for maintenance or changing or anything.
Okay, so I hear you, Mayowa. So this is where I'm going. And it's very clear. I like your response to second and third question. Even though the first one, I'm not really clear about the insurance. I'm not really clear about the direction of the insurance. But this is where I'm going for it.
So we have a partnership with an insurance company.
Okay, that sounds good. So, like for example, let's say after 6 months, you have AC issue, you have to replace AC, you have to replace washing machine, you have to replace bed sheet, all those. Are you going to reduce my net income every month because you are doing that?
Like I said, so we're going to like amortize every month. There are expenses. Okay, Dayo, you want to take that?
Okay, yeah. So this is it. It is when you own an asset, that asset is expected when an asset that generates income. It's expected that asset can maintain itself just from the cash flows that it generates. So, for example, if there's capex, when a regular company wants to invest in its own business, they will take from their retained earnings, or they take from from just the cash, or they get loans from a bank or something. So now you cannot loan from a bank, so you have to take from your retained earnings, and that's the reason why your earnings would reduce. So let's say you have, but there's a way we make it very easy for you. So rather than you paying out all of that at once, right? We then spread that, we amortize those payments over, it could be 6 months, it could be 8 months, it could be 9 months, it could be 10 at a, applicable interest rate. Okay, that's very on. So even you, when you are getting those returns monthly, you will not know that, you will see that the returns are fluctuating. Yeah, there's a variance, in what you get monthly. But of course, you will see that when the demand is high in the market, you won't even know that we've made some expenses in maintaining and all of those things. So I think the business is very, very sustainable. That's what we are focused on. We are not running a Ponzi scheme. All right.
I'm just trying to.
Sure.
I'm just trying to. Is it from my side or from your side?
It's not yours. I've muted the person here. Please mute your mic so you're asked to speak. Sorry. But real quick, so I can get Russell to ask a question, and maybe send a DM, but maybe last question, and then send a DM just so I can cycle the room. Yeah, go ahead, Menga.
Okay, I think he has answered my question. I'm just trying to. Okay, let me allow other people to ask questions. Let me use the mic for now. Thank you.
Okay, so because I have them for an hour, I want to keep them as long as possible. They've been here for a time. Let me get Ice News. We've got Ice News, Bishop, Rocky. So hold on, Ice News. I've got Ade Nubia Diana. Did I get that right? Ade Nubia Diana. He's been here for a long while. I'm not sure if you still want to speak. I don't see any profile picture. Ade. Is Ade going to speak? If he's not going to speak, then I'll just get Ice News. Please go ahead. Ice News, you've got the floor. Go ahead. Okay, let's get Rocky. Rocky, go ahead. Rocky.
Can you hear me? I'm here. Sorry, apologies.
Yes, I can. Please go ahead, sir.
Good evening, everybody. Nice one, Carlo, for what you're doing here and everyone here. So my own is that here we are all talking about money. So the guys in charge, I want to ask for a partnership because I'm into.
No, Ice. If you want to do that, Ice, you can send him a DM real quick, and you can take you on that. Just send him a DM for that, right? Ken, hop right in.
Okay, thank you very much, Carlo. Good evening, everyone, to the house, and thanks for the presentations thus far. What I would like to ask the gentleman in the house is the issue about ownership, because when you talk about real estate at the end of the day, ownership is really important. If you might say you have an asset, but you don't really own it at the end of the day. And I've heard them mention, some things about leasing the land, and then building upon it and all that. So, how is ownership managed at the end of the day? Who owns these properties at the end of the day in terms of as legal? When you talk about legal ownership, how is it managed?
Hello.
Rocky, please hold on.
Hello. Dear sir, hello.
All right, go ahead.
Okay. I think that's the question. Yeah.
Okay.
Ownership is really important. Thank you.
All right. So, all the projects that we're currently selling at the moment, you own it outrightly. The lists that you heard us mention were the models that we started with 2-3 years ago when we couldn't secure financing to buy the lands outrightly. So right now, the lands have been outrightly purchased. Right, it's not a joint venture. It was outrightly purchased, and we'll be transferring ownership through the deed of assignment to all the investors that will be buying into that project.
Okay.
Okay, great. Thank you. Very good stuff you guys are doing. You guys are doing a great stuff.
Thank you,
to be honest. Great work. Yeah.
Thank you.
All right, let's get Bishop. Bishop, go right ahead.
Yeah, good evening, Mr. Kalu. Good evening, everybody. I don't know if my questions have really been tackled earlier. I think I came in a little bit late, but I have 2 questions for you. One, how quote and unquote regulated are you? How do we know our monies will be safe with you? That's 1. 2, like I said, I came in quite late, and the only idea I had about who you guys are was when somebody mentioned Crestview. So I did a quick Google, and it didn't really come up with anything. It was coming up with some foreign, India, American stuff and all that. Because I remember a speaker before me said something, asked about a website. You were silent about it. So if I need to take a decision without really, I understand you can't answer all questions here. Is there a website, or where can I go to really take my time, get all the information I need, and decide if this thing is really for me or not? Thank you.
Okay, thank you very much. So I guess you didn't Google the right, you didn't get the spelling right. Crestville is CREST, that's Crest, then VILLE. I guess you wrote Ville, so it's Ville. Villa, Ville.
Can you also share that on the Jumoke or DM me so I can just put it up there?
Okay, yeah. So Jumoke, yeah, just please send a DM to Mr. Kalu so you can post it. Yeah, and yes, we have a website, so we'll send the link as well. Then you can also check the construction page. So we have the company that sort of constructs these properties and mark.
Okay, I think you
Check us on Instagram. AM_realty. So AM_REALTY. AM_REALTY. Then the facility management firm that manages the shortlets is Crestville, CRESTVILLE. Then the website would be posted. That's crestview.ng. You can check it as well. Then we're sort of like revitalizing the Asset House and AM Realty's website. So it's currently not on right now, but through our Instagram pages, you could sort of see all of our projects, the ones that we delivered and the ones that are currently in operations.
Yeah. Also, Adebolu.
Yeah, and I think on this space, we have had about 10 of our current investors are from Kalu's followers. So if there's anyone here as well before the end of the session, you can also say the word or two.
Yeah, I was going to talk about that. I know like I said, you've been here for a long time. I think 2 years and 1 year. Just want to talk about what you did, the returns you did for those folks, and how it's planned. If you just give a bit synopsis. I know I brought you in. And some folks sent me DM. They've been impressed. That's why I'm bringing you back again. So you're not a quote-unquote fly-by-night guy. You guys have been doing the job, and we're pleased to partner with you on that. But you can talk around what you did in the past, i.e. the leasing side. I think that was very interesting.
Okay, yeah. So our first project was in Ilupeju. So we got the lease for 15 years. We sold the 1 bed for 7 million. and we sold the 2-bed for 13 million. So what that means is the 7 million means you're owning the 1-bed for 15 years, and the 13 million means you're owning the 2-bed for 15 years. And by the end of this year, every single one of the investors would have broken even. The 1-bed, I think all through 2023, and now they've earned an average of 350,000 to 400,000 monthly. And the 2-beds have been earning between 500 to 600K monthly on a daily rate of 40K to 60K per day. Right. So at the end of this year, 2024, they invested in 2022. They will be breaking even, and for the next 13 years, they will be enjoying profits, right, till the end of the 15-year tenure. Then the second project in Surulere was a 23-year lease as well. We sold the 1-bed for about 14 million, and the investors right now, because of the existing debts that we're trying to like amortize, they should be earning well above 400K, but there was an inflation, and we had to, load in some chunk of money to complete the project. So right now, the return will be stable. The first return was paid last month, which was about 320,000 naira. So we're looking at stabilizing that between, say, 350 to 400, despite the loan that will be deducted over the period. So the one in Ikeja and the one in Antonio, we are forecasting between 700,000 to 1 million, because it's going to be 5-star, and we'll be charging way more than what we're currently charging in Surulere and in Ilupeju.
That's perfect. Good to know. So, guys, we'll spend more than an hour here. I think it's been fantastic. If you read, well, once you guys send that stuff to me on DM, I will share. I think I getting a lot of DMs. People want to know really about you guys. They want to know really and do their own research. It's a tight economy. Everyone wants to make money, but they want to make sure they're putting it in a place that is, that is real and all that. So I appreciate those sentiments. But guys, they are here on my space. I know them on a personal, even outside the space. They're good. If you want to get into real estate investment, this is a very, very, very low ladder to get into that space. Like you said, you get your incomes monthly. The cost of you getting in is reduced. When they did the leasing, it was well reduced. People got in, people got paid. There's also a way for it to get in. So I'm giving, if it was my own, I know them. Let's put it that way. UC, I've got UC. Bishop, I don't know if they addressed your concerns. If not, send me a DM, Bishop, after this. I'll make sure I get across to you. But Bishop, are you okay?
Yes, I'm okay. Well, I think they didn't answer the first question about regulation. How regulated are they? Yeah, so that we'll talk about
what do I mean? Stockbrokers are regulated. Is there any regulatory for builders? I don't. Apart from core, which is engineering. What are you looking for when you say regulation? Are you looking for like the company? Maybe are they CAC? Obviously, they are. What would give you?
No. I'm not talking about the builders, as in. I'm talking about the business aspect. That we sure when we invest, we have them around. They don't just run away and all that. That's what I'm talking about.
I hear you. I mean, that's the. I mean, in a sane Nigeria, you guys should be the ones that are going to be listening on the growth board of the NGX. The growth board. I don't know if you guys are there yet, but this is a second tier market. Isn't it that way where you guys should be? The up and coming folks, be there, be able to raise capital, long term. Imagine if you get equity capital instead of getting debt capital. I mean, that's a conversation to be had right there.
Hello, Kalu.
Yes.
So I think for the last the last person that asked that question about we're not running away. See, I won't blame him. Nigeria is sometimes you can get your hands burnt, and I think one thing that has really stood out for us from the last illustration I made, if we had a deficiency of over 40 million, and we had to put in our own capital to complete the project, because there's also an incentive for us. The incentive is we are also making money in the operation side of the business, right? So we are not just building and selling. So we ourselves, we are also looking forward to operating the business, because if we don't, it means that we have sunk in capital, and the building is lying fallow. The investors are not living there, and we are losing money. We are growing the brand. You can just Google Crestville Apartments. You see how much work we have put in our social media pages. I mean, Instagram, TikTok, Twitter, it's everywhere. And you would ask five youth within the ages of 23 to 35 that have they heard about Crestville Apartment before. I can tell you one of them will tell you yes. So that's significant amount of work that we have put into that brand. And tomorrow we will not run away, because we are building the sixth location. Right now we are in Ilupeju. We have two in Surulere, the 3-star and the 4-star. The 4-star will have a swimming pool and a gym. We have one in Lekki that will be launching also this December. We have one in Ikeja. We're about 60% sold out, and currently we are opening another investment opportunity in Antony. So that will be the 6th location in 2 years. It has been a mix of debt and equity. So I think we have grown significantly. Like Dayo said, we secured a credit facility from the bank as well. So I think at this point of our growth, what is really important for us is obsession for value. Aside the investors that we pay monthly, we have about 500 registered agents. We have registered about 300 UNILAG students under our student partnership program, so that students also can be earning, commissions off the shoplet apartment. So the structure that we have put in place is occupying about 30 apartments on a daily basis, right? So the structure that we've put in place, it can only go up from now. It can only go up from here. We can't sort of tomorrow then run away with the money. So, but I would like that you do your due diligence. Check Crestville, check AM Realty, check our project, and I believe if you have any more questions, you can just slide into our DM on Twitter or Instagram. We will definitely come to the office, take you on inspection tours, and you see all of these things yourself. Thank you.
Yeah, and I'm going to share all the contact information now, the Instagram handle, the website, even the contact phone numbers for Dr. Fadebola. So if you want to contact them, you can. I'm going to share it on Twitter, so you can just go back after this and get them. Yeah, no worries about that, guys. UC, I think you're going to be our closing guy. Let me see. UC, go ahead. What's your mind?
Yeah, hi. Good evening, everyone. My name is Uchenna. So I think I invested in Crestville Ilupeju, right? So like this is for people who are asking about, like investors and all that. Invested in Crestville Ilupeju. I think then it was about 7.5 billion, and then paid like 2 million for furnishing and all that. So I want to say that since the Crestville Ilupeju launched, I've been receiving my monthly commissions. In fact, even before I invested in it, I had to get a lawyer. I had to, I asked Mario lots of questions. Like he has to provide, lots of answers for me. And I think I would love to say that that's one of the, most important investment decisions I made. Right. Even though I'm yet to be involved in any of the other projects like the Crestville 2 in Surulere. I think it's also one of those investments that I really wished I had also invested in, because then the prices were not as high as they are right now. So yeah, if you have, this is me now telling every other person here that if you're interested in this, yeah, just do your due diligence, like just do your research as much as you want to, but they are legit, and I'm also like a beneficiary of them. I received my September monthly payments on the 3rd or 4th of October, and it was about 306,000 naira, just free cash. Nobody calls me to tell me water is not running the tap, there's no generator, there's no fuel, this one. So nobody calls me to tell me any issues. At the end of the month, I just get like a report, and then I get like the company's target for the new month, and some of the strategies that they actually employ to develop all these things. At first, when I heard about it, I was actually looking for an opportunity like this to get into the shoplets. I have one on the island, but I'll tell you for free that Iwan and his team, they do a better job than than the one that is even on the island, right? That's how crazy, Mayowa's marketing really is, right? Just my 2 cents. If you have the funds, right, do your research, but also, like, feel free to jump into it. They are really solid guys. I wish I had money to do, like invest in all of their properties, but yeah, that's just it. Thank you.
That's fantastic. From an actual investor coming to speak. Fantastic. Good job, Adebola and Mayowa. Very, very good job. Yeah.
Thank you, Uche.
Yeah, Adebola, I'm not sure. Do you want me to share the phone numbers on Twitter? I got the phone number. I've shared the handle on X. I've shared the website. There's a phone number there. Is that shareable?
Okay, I can. Yeah, I can just even like call it for anyone that wants to have it. 081 081 That's my personal number. And one thing I've tried my possible best to do is I keep our investors so close, right? So I have their WhatsApp contact. In fact, I sent them link personally to join this Twitter space. So we talk every now and then. So we are never distant. Even the Ilupeju investors that invested far back, I think I've not seen Uche in almost a year and a half now. And I'm happy that he could say a lot of good things about us. So you can always reach me. You can call me. That's my WhatsApp number. And my Instagram, everywhere at Adebolu Mayowa. You can check Instagram, Twitter as well, even if I'm not as active on Twitter as I am on Instagram. But 081 WhatsApp and mobile call, you can always reach me.
Fantastic.
So I saw a question. In the this thing. So I would say this: we are SCOMO certified. That's one, but we are not a REIT. I need to make that very, very clear. We are not asset managers. We are not a REIT. I need to make that very, very, very clear. Why? We do not risk. We are not an asset manager, right? We don't manage. Our strategy is completely different from that. We oversee or supervise the facility, right? And we market that. If an asset manager is managing your portfolio, they don't even talk to they don't go there to see what they are doing. They don't go to the factories or all of that. So what we are doing, we are operators, okay? And we are not a closed-end fund like a REIT or something like that. So that's completely different from what we do. I just want to make that very, very clear. So because I saw a question in the comment section. So I think that should be clear now, but we are SCOMO certified.
Okay. What's SCOMO? Just what's SCOMO?
Okay, yeah, it's like a money laundry certification from EFCC to verify the investment activities of the firm.
Perfect. Okay, excellent. All right, guys, I think we've covered the floor. You've talked about what you've done then. You've talked about what you're doing now. We've compared this with other investment classes. We've taken questions, lots of great questions, I would say. And when people ask questions, it shows there's interest. So I love it. And I've also brought in, a verified user satisfied with the project can come up here, put his handle on and say, listen, I invested. I've got my money. You guys should go ahead and invest. That's what we want to see, that's show and tell. And you guys have been perfect. Like I said, I wouldn't bring you here if you were not, so I'm happy about that. The whole idea, guys, is to give you options with your Naira. Naira is high inflation, there's a dollar issue. What can you do with your Naira? Where can you put it to make more for you? Where can you put it to keep it safe? That's all we do here on the space every Sunday, 7 p.m. West African time. I think we've done great. I have two guys that want to, let me see if we can just add them and then go from there. I've got Shoes and I've got this gentleman, Ola Shoes. Then Ola and Shoes. That's real quick. Then we'll just close down. Ola, what's on your mind?
Good evening, everyone.
Yeah, hi, Ola.
Yeah, I'm good, thank you. Kanu, how are you? Thanks for bringing me on.
Thank you, sir.
Mayowa, right, and the other guy, Black JP or something. Yeah. Can you guys hear me?
Yes, they can.
Yes, loud and clear.
Yeah, I think you guys contacted me sometimes, it was early last year. It was on this space, Kanu space that we met as well. And since then, I've been following you guys because quite unfortunate I couldn't partner with you guys because I've got something now huge going on for myself as well. So, but recently, I sent someone to your property, the one in Surulere, because a friend of mine lives in Surulere. So each time I go to Nigeria, I usually stay in Ikeja, GRA. But because this new property of yours is not far from where he is, so I decided I would stay in Surulere, so I would be closer to him, something like that. And he was excited. He went over, but the only ish, which is not biggie, but at the same time is big, is because considering the number of apartments you have in that, the one in Surulere, the parking is not good enough.
Okay. Yeah, I in fact, those two projects were lease, right? And to be honest with you, a lot of our customers, we have never had an issue with parking. I think for the entire building there, we have about five parking spaces in the premises, then about 2 parking spaces outside. And usually most of our customers just come in Uber and they leave. But one thing I can tell you is we have also improvised, in our future projects. The one in Ikeja is 1,000 square meters, and the entire ground floor would be parking. That would take about 25 cars. The one in Anthony is about 1,500 square meters. That would take about 35 cars. So for our other projects that would have higher standards, like I said, that's supposed to be 3.5 star. The going rate is about 45,000 per night. But the ones that we're looking at doing, because we want to attract another class of Nigerian markets, diaspora markets, we have to, of course, improvise in our own amenities, and we prioritize parking as one of the most important services that we'll be adding. So that would be the last project that would have a limited parking facility. Thank you for that as well.
Thank you, guys. Cheers. Yeah, that's just it.
Perfect. Thanks for that question. Let's get shoes, and after shoes, we just call today. Shoes and jeans. Did I get that right? Let me get right. Shoes and jerseys. What's up? Going once, going twice. Hey.
Hey, good evening, everyone.
Yep. Hi.
Yeah, good evening, Mr. Carlo. I must say, you're doing a great job here. I appreciate you a lot. I came in late here, so I didn't really get much. I just want to ask, what is the minimum investment fee for someone who would like to start up with this project? So that's just my question. I appreciate you guys.
So minimum to buy into the one. Maybe you should maybe we should just get the price list again, guys. What's the cost of the 1 bedroom? Cost of the 2 bedroom? Maybe we'll get that again. Then it will.
Okay. All right. So currently, all the lease projects are all sold out and have been delivered. So what we're currently selling are the ones that you own outrightly. So the minimum investment property is the 1 bedroom, which currently is going for 50 million. We have started the project already. We have concluded 115 piles we have concluded the foundation phase as I speak. So you can always go and check if you have anyone in Nigeria or if you're in the country, you can always go and check. The 1 bed is 50 million. The 2 bed is 75. So those are the 2 offers. And the one in Anthony will be launched next week. I could send in details for any investor that will be willing to key in early.
All right. Thank you, guys. All right,
so let me just chip in there also that even though the price is 50, right, there is a payment plan, so you don't even need a 50 million naira outlay. So I think for the 1 bedrooms, you only need about 10 million to deposit, and then you can spread the rest over the 15-month period, over a 15-month period. So I think so you can always contact our team to give you more information on that. You can DM some of the accounts that they will drop the phone numbers in the comments and all of that now, so you can reach out to them. Of course, you do not need to make that 50 million naira outlay upfront. So I need to make that also clear. Thank you.
All right, excellent, guys. All right, guys, let's just get closing remarks, and then we'll just call today. It's been a wonderful session. I'll say so myself.
Okay, really nothing much to say, but one thing I would say is, for us, we are really driven. We are very youthful. I bet you wouldn't want to guess the average age that works with Asset House, the company superseding this project. But we are very youthful, driven, and we're obsessed with value creation, not just for our investors, but we have added so much value to the economy, investors, direct and indirect labors, and we want to keep doing this. This is what really drives us. We really think there are investments that can be properly optimized, and that's what we are focusing on. Any investment class that we will decide in the future that we will be doing, we just want to ensure that we're creating optimized value. So I already put out my number. You can follow us on Instagram, Twitter. Would ensure that responses are attended to very, very swiftly. Thank you very much for joining. I hope we would have this space again before the end of the year, by the time we launch the other two projects in Lekki and Surulere. Thank you.
Excellent, guys. Thank you so much, guys. Hey, guys, we're talking real estate in Nigeria. How to get it right. I mean, we've talked with Realty Point now. I mean, they've been talking about leasing. Now with purchase and earn, I like what I've heard. Constant cash flows to you as the investor. You own the property. You don't have to worry about the maintenance and all that. It's yours. You just sit back and you get the cash flow, i.e. the returns coming back to you. As compared with other asset classes in Nigeria, this looks good. Plus you get the compounding, plus you get the asset appreciation. So it's a way into that real estate ladder in Nigeria. It's perfect for folks that want to get into real estate but don't want to be landlords to go and collect rent and to go and fix anything. It's perfect for you. I like it. I like what they're doing. Anytime we see young folks doing stuff, we got to support them, and I'm a big supporter of what you guys are doing. So Debola and your team, thank you so much. I wish you guys the very best. On that note, I'll see you guys again next week. We have some stuff planned for you folks, so please hang on. Always tune in here every Sunday, 7 p.m. when we're, of course, talking money, the capital market, and, of course, the economy. It's tough in Nigeria right now. We get it. Fuel price is going to go up. Dollar is also going up. You've got to work for your, i.e. you've got to make the funds that you have work for you. You know, the way you hedge is to keep on growing the returns. You really can't save. You really have to try to earn more than the inflation. I think that way you can come off with a real rate of return. It's tough, but do it simple. Don't take excessive risk. Just do it simple. What you understand, start from there, and it works wonders for you. On that note, guys, let me let you guys go in. Get a good night's sleep. Monday comes. Be safe. Like I said, keep it simple and take care of yourselves. Thanks, guys. Olumide, thanks so much for hanging in here as well. You guys have a good one, and bye.